Stride Ventures has announced the first close of its third venture debt fund at $100 million. The venture debt fund is targeting a final close of over $200 million for the third fund and is going to deploy this to meet the debt requirements and global ambitions of Indian startups. Now, Stride Venture Capital has sanctioned more than 5,000 crores in the Indian startup ecosystem to date and has distributed over 100% of its commitments to early investors of its Fund 1. So for more on this, joining us now is Ishpreet Singh Gandhi, who is the founder and managing partner at Stride Ventures. Also with me is my colleague Arundhati from the Mumbai studio. Ishpreet, welcome to Startup Street and thank you for your time here on CNBC TV 18. Start by telling us about this third fund that you're targeting at 200 million. Firstly, when do you hope to achieve the final close and where are you hoping to deploy it and at what stage?
First of all, thank you for having us on the show. It's always a pleasure to be back on Startup Street. So interestingly, we've got a license in January this year. So doing a first close within 4 months of the license, which we have achieved, I think it's a great validation of what we are trying to achieve as a brand Stride. We think overall that next 3 to 4 months should be the timeline for us to go towards the final close of ensuring that we are at least at $200 million. That's the endeavor.
All right. So in 4 months, we'll see the final close of it. Hi, Ishpreet, Arundhati here. Have you already identified any startups for investments? How many companies are you looking to invest in, and what will the average check size be at this point?
Yes, Arundhati, interestingly, if you see Stride's philosophy, we've been always, since our starting, we've always believed that debt is important at various stages of the journey. Interestingly, in your show today, there's been a lot of soberness towards startups in terms of the news which is happening. So credit has really picked up. And more importantly, if that's structured well alongside the businesses, the structured credit requirements within startups is fairly high. So we already started, in fact, we've already identified opportunities and deployments have started from Fund 3. To your question, specific answer, the amount can be anywhere from, say, 10 odd crores going up to 60, 70 crores, depending on what stage of the business we are coming, what kind of structure we are doing with the business. But we already started identifying a lot of opportunities and we see a fairly quick disbursement and understanding the current credit cycle. We see a lot of requirements coming in and we've started deploying as we speak.
Okay, but Ishpreet, what's really the investment strategy? You know, because as we understand, venture debt is something that startups really look at, when, they want to extend the runway, when the option for equity perhaps isn't there. So I just wanted to understand, are there specific themes you're looking at? What's your investment strategy going to be like to protect your investments?
Sure. And you rightly mentioned, actually, in today's time, it's important since venture capital rounds have got subdued. How do you maintain right kind of credit structures in order to make sure that the delinquencies are in check? So fundamentally, we believe in businesses who are the market leaders. What's happened, interestingly, is a lot of capital has flown into the startup ecosystem in the past, in 2020, late 2020, 21, and early 22. Now, when we entered Q2 of 22 calendar year, we realized that naturally the cycle is not as strong as what it was in the previous 6 to 8 quarters. So that's actually resulted in a lot of credit checks at our end in terms of various companies, that where they were positioned at that point of time and what kind of support they required. But more importantly, what we have seen through our journey since Stride Fund 1, that a lot of startups have got used to the fact that there are a lot of use cases of various business requirements. Working capital, capital expenditure, inorganic growth of acquisitions. There are a lot of use cases of different businesses which have started emerging. So our strategy or our investment strategy has always been around understanding businesses, funding market leaders, seeing what journey they are in. Typically, we do mid to late, right? So if you're doing early stage, since the investment activity is strong there, we've still found some scope of coming alongside venture capital. But mid to late is where we go deeper on our credit track record of ensuring that we understand businesses, their unit economics, where they're positioned, if they are at all closer to EBITDA positivity, at what stage they'll achieve that. Some of them are already starting hitting EBITDA positivity. So the point is that it's a combination of looking beyond founders, large investor base, deep capital base, and unit economics and the market in which they're playing. That's been a part of our core strategy.
Right. So mid to late is where you're looking to invest in. But just to take off a little bit more from that question, what is your estimate of the current demand for venture debt across Indian startups? Is a majority of the demand still coming from fintechs? How much of it remains unmet? And at what pace do you expect venture debt demand to grow at this point?
Sure, Arundhati. Look, if you see our deployments, it's been across sectors. We have not been only dependent on fintechs, while we have backed some of the market leaders. You see that strategy holding place in every sector. And interestingly, what we've realized, especially in today's time, the sectoral allocation is further getting diversified. So it depends on what stage of companies they are in, what level of business they're conducting, because we've seen a huge uptick of, so take consumer sector as an example. There was a lot of online impetus during COVID. So there was a lot of D2C in terms of talking directly to customer through digital forms. Now, all of them have gone into offline distribution. So that's actually require a lot of working capital to come in play in the consumer sector. Similarly, B2B businesses are largely have a very natural working capital cycle to fund. Fintech sector you spoke about, and other sectors like healthcare and agri-tech and education are seeing a lot of consolidation in terms of bigger companies trying to increase their market size with available opportunities. So we've seen opportunities across. In terms of value of investments, we're very confident of saying being around 200 to 300 crores of monthly disbursement, which we have been doing. So there's a very significant uptick. As I mentioned, we have been quite cognizant. So this deployment is irrespective. We have seen 3x of the demand of this through top companies, but we've been very judicious about what kind of companies you want to back in.
We just have the final 10 seconds. How large will your portfolio be in the near term? 5,000 crores sanctioned so far. How much more?
Yeah, at Stripe, we've crossed 5,000. We believe it's $1 billion annualized business, which we'll be at soon. If you only speak about venture debt markets in Stripe as another element of the business, if you only speak about Stripe Ventures as a business, we see venture debt market close to $3 to $5 billion in the next 3 years. And we believe we can easily constitute 30% of market share. The way you've seen our market share increase since 2019, the significant opportunities of us combining our hands with some of our LP banks, doing working capital structures, doing new creative financing structures in form of structured credit, including acquisition financing, has seen tremendous demand. So we see that if you are able to, in the next 6 to 12 months, you're able to reach a 500-600 crores monthly deployment, which is an annualized $1 billion of deployments in the sector.
All right, Ishpreet, on that note, we're completely out of time, but thank you so much for joining us here on Startup Street today.
Thank you. Thanks so much.
On that note, it is time for us to head into a short break, but coming up, can AI tools benefit the education space? We bring you a special report on the pros and cons. Stay tuned.